Hello and welcome to a World Built Environment Forum event on attracting finance for net zero. We're going to today be looking at the localized approaches that we see across the globe with specific reference to India, Southeast Asia and Africa. And I'm delighted to introduce in a moment a really esteemed panel of experts who know this field extremely well. So good morning if you're in the UK, good afternoon and evening if you're in other parts of the world, in Africa, Southeast Asia or India. We were very pleased to have you here. We have a chat function, which I hope everybody can see. Please would encourage you to put questions in the chat and we'll come to those as and when during the session. First of all, if I may just talk about myself, I'm Steve Turner. I'm Director of 3CI. We're based in the United Kingdom. And we are the Cities Commission for Climate Investment. We've been running for 3 years and we were launched at the Glasgow COP in 2001. And we support cities in the UK to develop new and innovative finance mechanisms for securing the necessary finance for them to achieve the net zero transition. So we work with cities, we work with national governments and international agencies, as well as private investors as well. So I'm joined today by three real experts in their area. First of all, Tim, and I'll let them introduce themselves in a minute. Tim is from Ghana and works as Regional Director for GFANZ, of course, the Global Financial Initiative that was launched in Glasgow. Sandeep joins us from India and is a climate advisor for GIZ. And Alexander joins us from the Philippines as CEO of Climagy, as well as chairing various initiatives across Southeast Asia as well. So I welcome all three of you and I'm delighted to have you on the panel. Sandeep, if I could perhaps come to you first to introduce yourself.
Hello. First, I must say it's a privilege being here and thanks for inviting me. So I have had largely a career in commercial finance in my current portfolio in GIZ India. I'm looking at how do we bring commercial finance for climate causes. And I've spent the 5 years before that in Climate Bonds Initiative, which many of you would know as an entity which looks at how do we scale up bonds which are related to where the proceeds go for climate change causes. Thank you.
Thank you very much, Sandeep. So clear expertise and knowledge in climate bonds. So there's our expert in that area. Alexander, perhaps I could come to you next to introduce yourself.
Thanks, Steve. I wear many energy efficiency hats. I run a few nonprofits for energy efficiency in the Philippines, in Asia Pacific, and a co-founder of the Global ESCO network, as well as I co-chair a task force in a global coalition called Mission Efficiency. I continue my energy efficiency advisory across Asia and a little bit in the Middle East. And I created the world's first privately owned super ESCO called Climagy.
Thank you very much, Alexander. Great experience and knowledge there, particularly on energy efficiency. And last but not least, Tim is joining us from Ghana, and Tim is the Regional Director for GFANZ in that region. Tim.
Okay, yeah, thank you very much, Steve, and thanks to Rix for inviting GFANZ to be part of this. So I started my profession in corporate America, spent over 19 years. And then in 2012, I joined AFDB and I was leading the mobilization of climate finance. We worked with GCF, mobilizing close to about 1 billion. And when GFANZ was looking for a director, my president seconded me. So I'm still with AFDB, but I'm on secondment as the regional director for GFANZ. And we've been working extensively with financial institutions to mobilize capital to support the net zero agenda in Africa. And we are very, very committed and excited to be part of this.
Well, it's great to have you here, Tim, and thank you very much, and to all of our panelists there for attending again. So I'm going to start off perhaps with a fairly broad contextual question, which is really, if I may, and ask you all, but perhaps I'll lead off with you, Sandeep, if I may. What are the most significant challenges that your country or your region faces in achieving decarbonisation and the transition to net zero? Sandeep, perhaps you could start.
Yeah, so there are quite a few challenges, but the one which I tackle and I face on a day-to-day basis is that of suitable technologies, trying to scale up, and in the process bringing finance. So there's a process which the world has gone through about for supporting, say, solar and wind. For decades, government supported them, and now they have become competitive. There's a large pipeline of that, and many such technologies need to be scaled up and replace certain existing products. Now, how we might have some experiments which are working, but then how do you scale that up and make sure that that becomes a standard, like say solar and wind is becoming. Now we need to have a grid scale batteries which need to scale up so that the grid can actually grow out of coal completely or fossil fuel completely. So I think this is the challenge which I grapple with on a day-to-day basis across many sectors. But this is a very common thread I find across many sectors. Thanks.
So I think what you're saying there, Sandeep, and get reflections perhaps in a minute from Alex and Tim, is that consumption patterns are clearly rising. And whilst you can develop renewable technologies, solar PV, etc., it's that storage bit, that critical bit, that storage bit through battery technologies that needs to be really scaled up to meet this challenge of growth and increased consumption. Alex and Tim, do you have any reflections, particularly for either on what Sandeep has said or from your own particular regions in the Philippines or Africa? Alex, perhaps I'll come to you first.
Well, I think the biggest challenge today is bringing the decarbonization and net zero down market, right? So the large corporates and possibly certain pockets in government, across governments in Southeast Asia, or have already set targets. Some countries in Southeast Asia are lagging behind, and the Philippines is one of them in setting net zero targets. But it's what we were pleased to see that the large corporates have already set their own decarb programs and net zero. But it's how do you bring them down to the mid market and down to the SMEs? How do you bring them to the harder and distributed markets of the residential, agricultural, forestry, and fisheries, for example? So it's bringing them down market and getting them more involved in a more inclusive decarbonization program. So that's basically where many Southeast Asian markets are struggling.
That's very interesting, and I guess like many areas in Southeast Asia and India and Africa, a lot of the economy is made up of smaller, medium-sized enterprises or entities which don't necessarily have the capacity of large corporates to address this agenda. I think that's your main point there, Alex. Great. Then perhaps from you again, same question. From an African perspective, I guess, or Ghana maybe specifically, what are you seeing as the major challenges?
Yeah, I mean, I think to piggyback on what Sandeep and Alex have said, particularly on Alex's point on the local, dimension, and that is one of the reasons why we really find your webinar very, very interesting and timely and appropriate. Because if you are talking about a net zero project, right, any decarbonization activity, the focus is on usually on the local and municipal. Because if you are, looking at promoting high efficiency, low cost LED lighting or improving building automation systems or having a high efficiency HVAC, whether you want to integrate sanitation, waste management, and energy systems in like landfill to energy or biogas technology, or even if you want to replace vehicles with electric or have solar PV infrastructure, where the rubber meets the road is the local or the municipal. But usually, governments focuses on the national level, and this is where GFANS, and as you may know, Bloomberg have a lot of local initiatives, and we are looking at piggybacking on that to have more local engagement and municipal engagement.
That's very helpful, Tim, indeed. I think that's interesting. I can just build on that and move to the second question, if I may. We're clearly seeing, rapid urbanization in many of your regions and areas. And everything that brings in terms of population growth, people moving to cities, and the infrastructure and service requirements that are therefore required. That presents, I guess, opportunities and challenges to that net zero transition. If I put that in context in the UK, the city that I live in Manchester, which was arguably the cradle of the Industrial Revolution in the 19th century, went through a huge urbanisation and growth process, but not in a way that was net zero in any shape or form. It was built on coal and dirty industrial processes. What are the challenges, really, I think, in terms of achieving that net zero transition in your economies, in your regions, as you experience this rapid urban growth? Perhaps I could come to Alex first, if I may.
Well, rapid urbanization is a boon and bane, right, to decarbonization. It brings in, I think the rapid urbanization in economic development would bring in more innovative financing modalities. You get maturity of both the ESCO and the financial markets. You're looking ahead with the greener standards, like green building standards. But at the same time, you're struggling with congestion. You're struggling with the shortage of infrastructure and capacities all over the place. That decarbonization and net zero finds itself drowned out with other priority issues, priority development issues. You're struggling with social developmental issues because of the congestion and rapid urbanization of a metropolis. In fact, it's been the long-term, medium to long-term plan of many local governments is to decentralize and to spread that urbanization more thinly across more geographical areas. So it's a blessing. Now, this is the other thing. When there's economic development, lifestyle of people change, then families which have not tasted air conditioning first will acquire their first air conditioner. So you see an incremental load. You see an incremental load because their lifestyle changes as the economy grows. Quality of life improves, but the energy intensity and carbon intensity increases as well. So yes, it's a tough balancing act when urbanization kicks in.
Yeah, I think you raised two very important questions, two sides of the same coin, really. One being the opportunities, I guess, that the increased population provides in terms of rapid, urban, clean transport systems, but equally, as we see this warming of the planet, then more technology is required to sort of adapt and live more comfortable lives, and the air conditioning systems being an example of them. Tim, perhaps to you next. Similar question to you, really. This urbanisation city issue, challenges and opportunities across Ghana and Africa.
Thank you, Steve. So, urbanization is presenting a challenge. That one we all know. As people are moving to the urban areas, there is the need to provide social services. There is a need to improve infrastructure, facilities, and all that. But I want to swing a little bit of what is happening in addition to urbanization, right? So in Africa now, you have a lot of dimensions coming from the remittances, right, from abroad. So now you may have somebody who is not living in Accra or Dar es Salaam or Lagos or Abidjan, but living in the rural area. But because of remittances, that person could afford refrigerator, could afford a generator, and we're talking about diesel-based generator, right? And could afford other facilities that are used to be previously enjoyed in the urban areas. So if we just going to focus on the urban, we're going to lose these in the and it will be very, very unfortunate, because there are a lot of them also. So yes, the urbanization is presenting a challenge, but we shouldn't lose focus on some of the new emerging consumption patterns that are also happening in the rural areas, which used not to be, right? In the rural areas, mostly the lifestyle used to be very simple. But with remittances and all that, people could afford it. Because if I'm living in US and my mom is in the village, I want her to have some comfort. And bringing that comfort is also having some net zero, some emission, implications. So that decarbonization should not only focus on urban. I agree with you totally. Present a challenge, but there are new emerging issues that I believe that we should also bring it into focus.
That's an interesting dynamic, isn't it? That urban-rural interface, and maybe perhaps I haven't got time today, but it'd be interesting to understand, energy consumption within per capita within some of those rural areas against some of the urban areas, I guess. But that's really interesting dynamic, Tim. Sandeep, perhaps I could finish with you on this particular question around those challenges.
So while urbanization seems inevitable, the way it has happened in India might not be a model for the rest of the world. You might have heard many stories about how floods have come in the most expensive localities in Bengaluru and have submerged the Audis and the Mercedeses. And this is not just about Bengaluru. Urbanization hasn't happened extremely in a very planned manner. That's a cause for concern. What I have some hopes for in terms of the rural or the remote population still having better comforts of life, and we still moving towards net zero, is some green shoots in distributed renewable energy applications. So a solar panel which runs a pump when it is necessary can run a grain grinder when the pump is not taking up the electricity, and it can run an EV charging station when that is not needed, and it can run a few other things when a few appliances can run on it, maybe even a thresher or some other agricultural appliances. I'm a bit hopeful that the mad rush towards urbanization can be checked to some extent, and green livelihoods can simultaneously be created in remote areas, largely due to distributed renewable energy. Thanks.
Thanks very much, Sandeep. If I may, I'll encourage people on the webinar to please post questions in the chat, and we'll come to those. But please do encourage you to type your questions into the panel. Some interesting points already being raised around urbanization, the play up between rural and urban areas, around the opportunities created by clean transport systems. But I want to come on to perhaps the issue of finance. How do we finance the net zero transition? And really, to all three of you again, and perhaps I'll start off with Tim, if I may, on this, is in your particular regions, what are the barriers, I guess, to attracting private investment? Because we recognise that the private sector are going to have to fund this transition wherever we are in the globe. There simply is not enough public money to achieve this. But what are the barriers to attracting that private investment? And I'm particularly interested, really, in how you create and what lessons you've learned from creating those investment opportunities which will attract that private investment, because that is quite challenging given the capacity for local and even national municipal governments to do that work. So Tim, on finance challenges, what are you seeing on attracting that private sector investment?
Yeah, thank you very much. If you could permit me to set a context, I think it would be very useful for the audience. Now, it's estimated that Africa needs about 270 billion each year for net zero, decarbonization. And currently, total climate finance is almost about 30 billion per year on the continent. And so we are talking about 240 billion financing gap, right? Private sector should play a key role. But in Africa, we are only seeing about 14% of this financing coming from the private sector. Unlike East Asia, where it's almost about 40% and 50% in Latin America. So we have a lot of work to do, bringing the private sector into play. And there are several barriers, but actually these barriers also present opportunities for Africa. And I'm not going to focus on the more generic barriers, but specifically when it comes to local and municipal engagement financing. So the first barrier that we are looking is the risk perception, right? Not the actual risk, but the perception that the region is risky, perception that even local and municipal investment are much more riskier. And this presents a very big challenge because the ratings, for example, give more weightings to regional exposure. So you may have companies in Africa or and another similar company with the same profile in Asia Pacific or Latin America. They have the same financial profile, but then because of this company being situated in Africa, because of the regional risk weightings, right, their credit rating is much more higher. And what happens is that with higher credit rating comes higher cost of capital. So developing such projects, tapping into financing becomes a very big issue. Already you are dealing with about 500 basis points that is really unnecessary. It's not actual, but it's just the regional weighting. Meanwhile, the project on the ground could be very financially viable, but because of the location, this dimension is coming. So what we are doing is mobilizing partners in the region, GINFANs and then partners in the region. We actually have events that we are planning at the World Bank, IMF annual meeting to really discuss, these issues. What do we really need to do? Because a lot of the pricing is more of perception and less of actual risk. Yes, there are some risk, but it should be the actual. It should be something which it's measured, not just perceived. The second thing, which it's related, it's more on the private capital, right? In Africa, the private sector have not really understood, or maybe we are doing some capacity building, but then how to integrate climate measures in the financing, the investment, and looking at how you could even balance the incremental cost and then also the concessional resources. And if I'm talking about concessional resources, I'm not only talking about the interest rate, but also looking at having a longer tenor, having a longer grace period, having to bring in financing which will occupy a lower tier or a subordinate position than what others are bringing because of this. And when we are talking about decarbonization project, this is very, very important, because if you are going to have to improve and automate a building, right, for energy efficiency, this is an incremental cost. Yes, at some point, it will bring some benefit. It will reduce the cost of operation. Efficiency brings, some revenues also. If you are able to tap into some revenues like in US, but not existing in Africa. I'll come to that, later on with some examples. But this incremental cost, how do you really, deal with it? And so private sector looks at it and says that, this is too much. What am I going to do with, this incremental cost of climate measures? It actually throws the financial viability of the project overboard and not very attractive for the private sector. Now, if you could permit me, we are talking about local and municipal level investments. So that also brings a different dimension of barrier, where most of the projects that we found are more small scale. And, because of that scale problem, you're looking for 1 million, and HSBC or any of the serious bank, what is 1 million to them? They have a threshold. It should at least be like 5-10 million, right? So the scale problem is also there. And what we have been doing is to consolidate, aggregate, different local, investment in order to achieve that scale. And for time purposes, there are, a lot of things that we've been doing, and when time permits, I will come in with some of those examples. Thank you.
So that's really, really interesting. And you raised perhaps if I can summarize 3 points here around the importance of risk perception as opposed to actual risk. I think that's a really important point, particularly in obviously developing countries. I think what you were saying, your second point, is around the importance of blended finance. How does private finance sit alongside public finance to sweeten the load and the challenge? I'm really interested in your final point on scale, because this is something we've certainly got in the UK, where a typical city municipality project is, let's try and do it in dollars, about $7 million, which is not big enough for a private investor. So we've developed what we called a national net zero project pipeline in the UK, where we've asked 100 municipalities for their projects, and we created a national pipeline with a value of about $80 billion US, and we can split that pipeline up into different assets, so we know how many electric vehicle charging infrastructure projects there are, and we can bundle those up either geographically or by asset and then go to investors, and investors really, really like that approach. So I'll just put that out there. And also, Tim, I think there's a couple of questions in the chat that are coming in now, specifically you. One around a clarification in terms of the figure is in from Tom, I think, is it in dollars or sterling? I assume that was dollars. Something about the rural urban hinterland, some really good stuff. So maybe you could respond to those in the chat whilst I come to Sandeep on this challenges around attracting private investment. I think you're on mute, Sandeep.
Oh,
that's it. I think we can hear you.
Yeah. Hi. Sorry, there was some noise coming, but there's no noise here, so it must be some technical issue. So, what Timothy, I'll take off from what Timothy mentioned about some challenges and the challenges becoming opportunities. So this is one opportunity, a success story, which a lot of people from India might repeat, is that of making LEDs, effectively replacing the earlier generation of bulbs, and definitely the halogen bulbs. So what did was, there was a centralized organization which went up to, I think, 50-60 different cities and said, hey, we will replace your sodium vapor lamps with light emitting diodes, which created a mass order for the producers of LEDs, which effectively meant that they had very little marketing costs. They got scale, they didn't need many people going around knocking doors and saying, hey, buy some of my LEDs. They didn't need that. And it created capacity, scale, brought down the price, and in certain cases it brought down the price by 40 times in a period of 6 years from the procurement start. In the 6 years it brought down the price around 40 times. So today in any lamp store you go, you'll see more LEDs than the traditional bulbs, though they're still more expensive, and sometimes they have made them very bespoke. You know, these producers have found ways of jacking up the price. They have made the, you know, some of the fittings very bespoke, so that you have to buy the whole fitting together. Well, that's a trick they have played. But effectively, LEDs have nearly displaced the traditional consumptive light patterns for nearly the entire country. It started with scale. However, I need to mention also that, you know, this is not a formula which works everywhere. The same organization had tried to do the same thing with electric vehicles. And what resulted is what I would say is a bit of a governance nightmare. The bidder was also the financier. So motor company would create a subsidiary which would bid. The motor company would bid, and then a financing company would, which is a subsidiary of the motor company, would say, oh, I'll do the financing of the motors, which is a nightmare in terms of, but that hasn't taken off. So, you know, an electric vehicle and an LED is not the same thing. The simplicity, there's a lot of difference. There's a lot of difference in procuring materials. It's just not the same. So while this is a success, I would say is an example. There are others, but this is a very well-known one. Today, India exports a lot of LEDs to many countries. We were not the pioneers. We didn't invent the LEDs. Let's be very frank. But somehow we brought down the price, and now we export it. But it's not a formula which works everywhere, anywhere, anytime, any degree of complexity. It doesn't work that way. So this is what I would state as an example, which maybe somebody can relate to.
Sandeep, I think those two examples are really, really interesting and really good. I certainly, you know, I agree with you from my experience. Sort of this was, you know, about 20 years ago in the UK, when the UK was part of the European Union, is that a number of European cities collaborated and jointly purchased electric vehicles for their municipal fleets, and worked with, I think it was Peugeot, the French car manufacturer, in terms of creating in some of that initial impetus and scale. And obviously, you know, that was driven by municipalities, and that's sort of a driver for change to start to kickstart that. So I can absolutely relate to what you just said. Alexander, can I come to you now, certainly from a Southeast Asia perspective, on the challenges around attracting that private investment?
Right. You know, the IEA believes that the $24.5 trillion is the investment gap for energy efficiency, and I'm not counting renewable energy, just energy efficiency. The global environment needs $24.5 trillion. And now my personal belief is that 2/3 of that, or roughly $16 trillion, will have to be through more innovative financial structures and financial products, through off-balance sheet modalities such as ESCO performance contracts, PPP transactions, joint venture agreements, where equity rather than debt finance flows. The mistake of many multilaterals, and I used to be a development banker myself, being the energy efficiency anchor of Asia Development Bank, and before moving over to IFC's Global Climate Finance Unit in Washington, handling the Asia portfolio. Now, the mistake of many multilateral development banks is that the credit-worthy sponsors in many of the countries would be banks. And for energy efficiency, it just doesn't work, because it won't achieve scale. Yes, it does work if you want to prime a market, but to scale the market, you've got to flow equity rather than debt finance. Your players for the built environment, for existing building stock, would be ESCOs. In my finding across Asia, China, India, and most of Southeast Asia, is that 98% of ESCOs do not have suitable access to commercial lending or bank lending to pursue the real pipeline of performance contracts. So it's a lack of that aggregation. If I were to borrow Timothy's words. It's the lack of that aggregation model that would pool many sub $3 million projects into a vehicle that would attract debt and equity. So that's the one, the lack of a structure, and that's exactly what Climergy is doing. It's really to pool 50 ESCO performance contracts into a portfolio and then attract the debt and equity into it. The second is there are many markets, especially oil and gas producers, which have difficulty phasing out energy subsidies, either oil and gas or electricity, and that delays the shifts of end users to either renewable energy or energy efficiency, or from power plants to moving away from fossil fuels. So the inability of many governments also to provide viability gap funding, because commercial investors will certainly look in many developing country markets. If they don't hit mid-teens after-tax IRR, then they don't put money into net zero or decarbonization activities. So it's really the governments, regulators, development agencies, if they want to prime more private capital flows, then it will have to look into how private investors can get their decent equity returns, and not expect them to do it on concessional terms.
Thanks very much, Alexander. So just like I think it was Sandeep was saying, and I think sure Tim agrees, is this question of aggregation is and therefore scale is really super important for private investors. And we recognise that certainly in the UK, and I think that's that happens globally. But what you've done is quite interesting. I think what you're saying is that Climergy as an organisation actually looks around and does that aggregation of projects, and then acts as a front door to private investors to make that investment. I think that's a really interesting and very clever model that is probably worth people on the webinar having another look at. If I can just come to, there are a few questions actually, if I may pause and just ask the panelists very quick reflections on these. There's a question from, I think it's Ariana. Yes, Ariana. So she's asking, she's saying, very interesting points you've all made around this difference between urban and rural areas. But as we get more infrastructure into some of those rural areas, people are going to perhaps stay there or move there. And does that therefore present a challenge in terms of the net zero transition? Tim, I think that's the point. We perhaps come to you, Tim. Is that something I think you were referring to a little bit in your first answer? Oh, you're on mute, Tim.
Okay, I think Ariana is right, and to actually give you an example, this is not only happening in US or in UK or but it's even happening in Africa because of the remote working arrangement, right? I am on a remote working arrangement. I moved from Abidjan, which is the city. I am now close to a village beach, in a Grand Bassam, close to Grand Bassam, which is more like outside of the urban area. And I know friends that also live in a village beaches and way from the urban area. So she's 100% right. There are trends that are happening, and I believe that there are trends that will also help to decarbonize, because a lot of these who are moving to the villages, right, are bringing to them a culture or some knowledge that, look, we have to move from the diesel based and the other biomass based systems that causes those emissions, and have energy systems or lifestyles that helps to decarbonize.
Thanks, Tim. And Ariane, I hope that's sort of giving you some sense of an answer. Certainly very helpful from Tim and his experience, particularly in Africa. Alexander, Sandeep, I'll come to you on a separate question, if I may, that's come from Peter. So, and the essence of this question is, In terms of driving this net zero transition, should the emphasis come from national governments, or does it come from grassroots level? Where should it be driven from? Alexander, perhaps your perspective first, and I'll come to Sandeep.
Well, when the Philippines, for example, pushed for an energy efficiency law, the force came from both directions. I believe that energy efficiency, there's huge inertia, whether it's a developed or developing country market. We tend to procrastinate. We tend to delay our actions on energy efficiency because of that inertia, and to correct that behavioral, or to cause that behavioral shift, sometimes government has got to whack a big stick and push a stronger regulations, even if it dangles little carrots, right? And that was the case of the energy efficiency bill. So government had to force that down. It's very rare, for example, that you see an energy efficiency law that has penal provisions, that would have criminal liabilities for violations thereof, that can throw a person behind bars for violations. And that was not present in the renewable energy law. But the second is you've got to have that force also coming from the grassroots. The Philippines has one of the lowest minimum consumption thresholds, where you start to inherit a long list of obligations under the law, and that starts at 50,000 kilowatt hours of annual fuel and electricity consumption, and that captures not the corporate, not just the middle market, but even small and micro businesses. So you have a more inclusive law. You have a policy framework with push from both directions, from above and from below.
Very, very great, impassioned answer, Alexander. Sandeep, you were nodding, I thought there, but your perspective from India, is it top, is it bottom, or is it both?
Yeah, so since I had the opportunity to work with Climate Bonds Initiative, which has a very large operation in Europe, and opportunity to understand how it's happening in Europe, it's largely driven, even before the regulations came in, it is largely driven by public awareness. So public awareness caused a lot of green capital, which then got invested. And I've been told many times by many people who have stayed in Europe that off the shelves, even a more expensive but more sustainably grown food flows off the shelf faster than the less expensive but not so sustainable this thing. So if public awareness is so high, then some movement will happen even without government intervention. Okay, now having said that, I think what would happen in most cases is the government, to quote one of current Indian government's economic advisors, he takes an analogy from cricket. He says that, look, it's the government's job to provide the floodlights, to make sure that the seats are good, to make sure that the security is tight, and that everything is working. It is not the government's job to play the game. The government has to keep off from playing the game. So I somewhat get to that. Now, so the government in India luckily created the right condition for a lot of startups. And I must say we have a long list of climate tech startups, some of them not so genuine, a lot of them having wonderful products. And sometimes I feel, oh my God, these guys have such solutions. We will overcome the climate crisis. So, but then how do you again make sure that these startups, their products are taken up? One of my current projects is towards agriculture, where certain products which will make the farmer more resilient to agriculture, we are now getting to the grassroots microfinance institutions to include them in a portfolio of their products. So it's an appropriate action at appropriate place. The game, this is not the government's game. Going to the grassroots finance institutions and say, hey, you give loans for this. That's not the government's game. That's a role we are playing through the infrastructure that exists. But yes, if the government hadn't created the right environment for the startups to come in, we wouldn't have this work to do. So it's an appropriate work for the appropriate agency.
Thank you, Sandy. So I think Peter, what we're saying is it's both government, it's both top and bottom is required, but government does need to provide, if you like, that framework for action, and certainly that's certainly what, you know, I guess the countries that have and cities that have really made this transition has required that partnership, arguably, between a national level and a local level, where it's in a local level where really delivery takes place and community engagement. There's one quick question I want to, we're not going to get through all our questions, are we, panel? But anyway, there we go. I think it's a really interesting question actually just come in from, I'm just going to see in the chat, it's from Richard. And I'm just going to go ask the panelists to say very, very quickly. And Richard is asking, yes, it's absolutely, you know, there are lots of very bankable, if you like, renewable energy projects which generate revenue and income. But have you any really good examples of energy efficiency projects which are investable? And I'm just going to ask you to just comment really super quickly on that, Alexander. And it's fine to say no if you don't know any.
Well, in the northern latitudes, it'll be heating, but in many parts of tropical Asia, it'll be cooling. So cooling systems, centralized cooling systems, you got deliver scale. It has a deal size of over $1 million, and its duty is high enough. It's annual duty. So if a system is running 7,000 hours a year and higher, then you know it just makes commercial sense. These are the types of projects. Now, yes, many of them have revenue streams based on the guaranteed energy savings, and there are performance guarantees behind that. But there are also energy efficiency projects which sell energy. I'll give an example. So waste heat recovery in heat-intensive industries such as cement, steel, glass, ceramic, pulp, and paper. I was working on a cement plant, right? And if I was just capturing waste heat from their chimneys that they were just venting every day, I could provide 8 to 10 megawatts of baseload power and cycle it back into the cement manufacturing plant, and that represents 1/3 of their power requirement. So sometimes it comes in the form of energy as a service. You sell energy back into to the host entity as off-taker, or it's guaranteed energy savings through performance guarantees.
Very good, very full, helpful answer, I think that indeed. Tim, any examples of, you know, it might not be energy efficiency, I guess, in Ghana and Africa, but the flip side of that, I think, as Alexander was saying, it's about cooling. Any examples of where you can provide, perhaps, where you think there are investable opportunities? I think you're on, sorry, Tim, you're on mute.
Okay, yeah, so for Africa, where we've been seeing a lot of the opportunities, it's, as Alex said, in the cooling, but we also have, you know, buildings that needs to be automated, you know, bulbs that we used to have a lot of these low efficiency bulbs, but we are moving more to high efficiency LED systems. And then we also used to have several, even in the irrigation field, diesel-based irrigation systems that are moving now into solar-based irrigation systems. And the electric vehicle hasn't, you know, maybe are moving to the interface between EE and renewables. But a lot of the opportunities are in the cooling, and not only in the residential cooling, but also silos, a lot of you know, agricultural product storage and others. Yeah, just let me, because of the time, let me just.
That's great, Tim. Thank you very much. Really helpful. Sandeep, again, from your side, you already mentioned the LED project, I think, which is an example of energy efficiency, of course, isn't it? And the replacement, which has obviously provided a cost saving, of course, too. Are there any other examples that you're aware of where energy efficiency?
Yeah, tons. Actually, there are companies, unfortunately, they are not very large, which will come to you and say, look, I'll put up a rooftop solar, I will replace your normal bulbs with LEDs. The initial capex, you don't have to pay us anything. You just pay us, you know, 30 or 40, I'm not sure what's the percentage of the electricity units saved. You know, going for the next 3, 4, 5 years, we will put up a meter and this and that. So this is quite common, but I don't know the reason why, most of the guys who are doing this haven't rescaled, and some of the big guys who got into this have exited. Maybe it's too micro a game for the big guys to do, who like to look at gigawatt scale. This is a widespread business, but it's facing some headwinds because there's been flip-flops on net metering. So why it thrives is, commercial and industrial charges for electricity charges are very high. The retail is subsidized. So the moment you put up a rooftop solar, the savings are quite a lot. And an industry would like one guy to take all the headache. The LEDs, the rooftop, let them take care of everything, let them have the servicing contract. It's a fairly widespread business across the country. We used to have events in every state about how in that state this business is thriving. So it is quite thriving. It is facing some headwinds, but it's fairly thriving.
Yeah, very interesting. Some really good examples there. I think on that. There's a question coming from Richard. I'm going to let you as panelists just type your answers into that on cooling, because I want to move us on if I may, and I'll come to Timothy first on this. Tim, so I'm thinking really, Tim, around some of the new financial models that are evolving that allow private sector to invest in where those revenues are generated, and particularly within a local context. What sort of financial models do you think are going to really work in the future?
Yeah, thank you very much, Stephen. You're right. We need new financial models, right? We all know that we could easily capture related costs and benefit in financial models of net zero project without any problem. Data on design, engineering, even construction, monitoring, operations, maintenance, commissioning, decommissioning. We could, capture all that. However, as we noted in the barriers, right, we need to integrate other dimensions in the financial model. For example, financial incentives, right, at the local level. And we need these models to really capture different things that were not in the traditional projects. I can give you some example, from US, where I spent, a lot of my professional life. In US, for instance, you could have a DER, right? And you could monetize a DER, that is a distribution energy. You could have this distributed energy resources agreement. You could monetize it in the financial model, because the revenue from it, there is certainty of it, because the utility company is improving the sustainability and resilience of its grid systems, and then you are also contributing to resilience and benefiting from low cost, benefiting from high efficiency, benefiting from improved economic value of the assets. So you could incorporate and monetize these extra revenues, right? You could monetize renewable energy certificates. You could look at different ownership, partnership, tax systems. For example, tax equity investment, right? Equity tax, you could look at different options from that tax equity investment. Now, why is it that it's very doable? Because there are laws, the regulations, there are rebate programs, there are incentive programs, both at the national and in US. It's not only like the IRA, the Inflation Reduction Act, which is But there are other local and state incentive programs, grants programs, rebate programs that you could integrate this in the financial model when you are looking at, building the financial model to really look at the viability of the project. We don't have this in Africa. So what are we doing? What we are doing is to work with some of these municipals, right, to come up with some of these incentives. Now, if you could do like equivalent of tax equity investment in your small community, right? You have banks over there. And if you could let them defray some of their taxes, right, by investing in a local hospital, providing them with or financing the solar energy. And over time, you use the tax rebate to defray your cost, whilst also earning from the interest of the debt that you are provided from that.
Tim, thank you.
If we are working with a project like this, we could certainly integrate this in the financial model. But without these regulations, it would be impossible. So that is why we are working with municipalities, not only because the government side, the national side, it gets very complicated, with parliaments and cabinet system, that takes a very long time. But in the municipal level, it could be more nimble.
That's really interesting, Tim. So there's lots of depth in that answer. I think this is being recorded. Some really great ideas of innovative financing, how you use the tax system. But critically, I think your last point was very interesting. And this depends how countries organise themselves and how centralised and decentralised they are, and the powers that municipalities have to raise taxation. But in the UK, that is challenging. But I think you were alluding there, Tim, that there are opportunities at a municipal level to do some of this really innovative work. Sandeep, any comment from you on financial models, and then Alex, and we'll see where we are with time at that point.
Yeah. So what is happening here is, if you consider, say, solar or wind 10 years ago as some kind of a model of blending, where subsidies were put into the PPAs. Now what's happening slowly but a bit steadily here is that the corporate social responsibility wings of corporates are now taken on the mantle, not for as large mandates as solar and wind globally. That's not the mantle of that, but maybe for lighting systems for villages. So we are working with a few CSRs that, while the FIs give the loans, why don't you come in with a 30% subsidy? So they can also show leverage that, my money has gone to my 30 that I give has financed 70 more. It has increased the opportunity for this thing. So these kind of models getting decentralized, and for much smaller technologies, not the global big ones, is something which I see happening and picking up pace. It's nascent now, but I'm fairly confident that it will pick up space because the incentives seem to be aligned.
Yeah, that's good. Very interesting. Alex, you were nodding there, Alexander.
Right. Well, project finance clearly works for utility scale renewables like wind, solar, and hydro and geothermal. Unfortunately, for energy efficiency, the financial model that would work is still the super ESCO aggregation model, and to flow more equity outside the balance sheet of ESCOs and outside the balance sheet of the end user. And this would accelerate and achieve scale in the deployment or mobilization of energy efficiency capital to more and more and more ESCO projects, because the ESCOs, we all recognize, are not that creditworthy. Another financial model would be using PPPs and to bundle more equipment assets. In the state of Malacca, I happened to design the first PPP for energy efficiency, and this is in the state of Malacca. So we were able to bundle 100,000 street lighting points across 4 municipalities. So that was another financial model that we could look into, and this could partially answer Richard's last question. Convert yourself into a mini utility where you sell a district form of energy. So it could be district cooling or district heating, selling steam, or you could sell compressed air you could sell other forms of energy. And this is where the energy as a service, cooling as a service comes into play. And you sell different forms of energy through 15, 20, 25-year supply contracts. So you convert your energy efficiency project into a utility-like operation.
Thanks very much, Alex. Really, really helpful. So we've got just, we've been extended by 5 minutes. So literally one question, and I'm going to ask for very short, quick, pithy 1-minute answers from the panel, if I may. Clearly, you work in hotter climates than I do here in the UK, and arguably the challenge there, I guess, as you've alluded to, is one around cooling. I wonder if you could perhaps give me some examples, perhaps of the challenges of how you finance those cooling interventions, and critically, maybe a quick case study, if you know of any, of where they've been financed successfully. Perhaps again, I'll go for Tim, Sandeep, and then Alex, and then we'll finish.
Okay, yeah. So where there is the cooling in the the commercial, the hospitality, but where the scale really sometimes it's also in the food production area, right? Because the temperature in the region. So preservation is very, very important, and that is why cooling is really, yeah. So that is where we've really seen a lot of the profitable, because that could be financed, right? Either as a debt, or you could even have some foreign companies that also deal into food production systems, like Unilever and others, to also have some form of equity, right, in that. The hospitality, it's more small scale, disaggregated, right? And then certainly also the residential, cooling in terms of air conditionings and all that. So I'll say that in the agricultural sector, and that is including the fishing sector, in terms of storage, and also providing some form of comfort, for the systems, the room. It's much more encouraging than in the other areas. Certainly, the residential sector, goes very faster, because it's easier to have a financing for like 50,000, for a hotel than 50 million for a huge storage system. But when it comes to more profitability, what we've been seeing, it's in the large scale cooling system, in the storage.
Tim, that's really, really helpful. I mean, I think you raised one issue, I think, around food and agriculture, and I envisage that when those products are sold outside the region, that cost of investment in cooling systems need to be passed on to other areas in terms of the higher food prices. Sandeep, perhaps I can come to you, and then we'll finish with Alexander.
Yeah, so I'll divide the answer into two segments. One is for buildings, and two is for agriculture value chain. For buildings, there seems to be technical solutions, but they need more momentum and more evidence of credibility. So, I mean, let me break down what that means. There are stories about how this corporate headquarters saved a lot of money, and the break-even period is 1.5 years after they installed energy efficient systems. Well, where's the data which supports that? In my previous job, I tried to get some case studies to prove this data, and I came up against a wall. So if there is just hearsay that oh, the break-even point is low, the prices have gone down, financier is going to get impressed. So I don't think the people are lying. It's just that they're secretive about what they did. They don't want their competitors to copy what they did. So, but without a little bit of data, finance won't move. And the second, it's a bit unfortunate, the current situation, there are plenty of cooling solutions for the agriculture value chain, many of them very innovative, either working on solar or on power derived from husk, or maybe others, decentralized. Unfortunately, they're not working as a business, and I have very reliable information on this. So so it will work as a business if the farmer can say, hey, I'm selling this to you. After that, it's none of my business. You take care of it. Now the system works is that, oh, I'm giving you cooling as a service. You give me the tomatoes today, take them 5-10 days later, then it will be high price. That doesn't work. So if an agri trading company says that, okay, I'm putting up some cooling as my infrastructure, then it will work. Now the current technology innovators need to become more businessmen in agri trading. That's the situation now. There are plenty of promising technologies. You'll be amazed at the technical innovations, but they are not working as a business.
Really interesting, Sandeep, and the opportunities that this presents, I guess, as you said, in terms of services and arguably third parties. Alexander, final comment from yourself.
Well, in the Philippines, we need cooling all 12 months of the year. Now, but what we found out in the Philippine organization is that from the coolest month of January to the hottest month of May, we need 10 coal-fired power plants more. Sure. So forgive the analogy, but we need 3.3 gigawatts more of generating and transmission capacities, and we can flatten that curve. And the problem with urbanization is that peak demand curve gets steeper and steeper each year. That bump that we have to the hottest months. So the correlation between gigawatt capacity needed and the rise in heat index is now getting clearer and clearer. Now there's two ways. Energy efficiency, we flatten the curve, and that's a permanent downward shift of the peak demand curve through the ESCO model, and a forced, and this is something that not even multilaterals or governments are thinking much about. It's the financing of forced obsolescence of low efficient energy uses such as cooling and air conditioners, right? How do we force the market obsolescence now of the low efficient technologies and low efficiency cooling out of a market? And the second is load shifting. We see shopping malls experimenting with thermal energy storage, buying cheaper power through off-peak hours, creating slurry ice and using the slurry ice to cool their fan coil units through daytime operations. So again, that's load shifting. So you get it away from peak hours and shift your load to off-peak hours. So those are two ways of managing cooling and decarbonizing the way we cool many parts of Asia.
That's brilliant, Alexander. I think your point on load shifting and peak demands is really, really important one, and being able to operate at those peak areas. So we've gone over time. I apologise for that, but I think that's the reflection of the quality of the panelists and the comments and observations that we're making, and arguably the interests of the attendees who are still running at a very high 90. So first of all, can I thank RICS and the World Built Environment Forum for putting this on. Please, everybody, look out for future events. They're a great series covering a range of topics. Can I thank Alex, Sandeep and Tim for being first-class panelists. I think if we're all in a room, we'd clap them. I'll do that anyway, but thanks to you three for providing such great answers and such a quality conversation. And thank you to the participants, for all those of you, wherever you are, for contributing and listening and taking part in this webinar. And so just leaves me to say thank you very much to everybody and enjoy the rest of your day. Bye-bye.
Bye-bye.